Hello, everybody. Today, I'm gonna explain to you about cash control. So, the purpose of this video is to make you understand about how the company do the cash control. Okay, let's get started. What is cash and cash equivalent? Cash and cash equivalent is a line item on the balance sheets stating the amount of all cash or other assets that are already convertible into cash. Any items with falling with this definition are classified with the current assets category in the balance sheet. The two primary criteria for classification as a cash equivalent are that an asset be readily convertible into a known amount of a cash and that it be so near its maturity date that are is a significant risk of change in value to date change in interest by the time of maturity date arrive. So the cash is about a amount of current assets that is uh, the shape is or the object is cash, and cash equivalent is any kind of related things that could be a cash in a time that as soon as possible or near the due date to get the amount of the cash. And the example of cash and cash equivalent. Example of cash are as follows: coins, currency, cash in checking account, cash in savings account, bank drafts, money orders, petty cash. Example of cash equivalents are as follows: commercial paper, marketable securities, money market funds, short-term government bonds, treasury bills. How to do cash control? There is 6 steps here, or 6 methods can be used to do cash control. The first is cash control over receipts and payments. Second is control of cash receipts. Third is cash received from cash sales. Fourth is control of cash payment. Five is voucher system. Six is cash paid by EFT. Cash control over receipt and payment. So this is about controlling cash over receipt and payment. This is how the company able to know where the cash comes in and comes out by the receipt or the record of transaction. So this is really important because the company have to control over every receipts and payments that are done in the company. For the example, company can use bank as the facilitate to control over the receipt and payment. For the example, the bank use one bank account. The purpose of one bank account is the company can maintain easily or understand easily where the money goes for expenses or for any kind that important for the company by only one account. That's why the cash control over receipt and payment in one bank account is it would be easier for the company, so the company can see every every transaction, every payment that made, or every sales that a company done could be easy check it by the amount or the transaction that are served in the company bank data. So the second is control of cash receipt. This is about in daily activity of business, the company have to check the amount from the operation cash and the receipt that are earned exactly the same. So the purpose of control of cash receipt is why company have to have cash receipt. Why the company have to control the cash receipt. So the first why the company have to have cash receipt. The receipt is the valid 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 things that company could see, valid data to show to the company that the transactions that happen is valid and it's real based on the receipt. And how do company to do control the cash receipt? Yeah, the cash receipt is will be always available and all have to or must available in every transaction. So every transaction that has cash receipt will be determined as a valid transaction for the company. So the cash receipt, it will be delivered into the accountant to to make sure the amount of the cash or the earnings by the company are exactly the same with all the receipt that the company receive. Next is cash received from cash sales. An important control used to protect cash received in over-the-counter sales in a cash register. So there are sometimes this type of business that payment is by always by cash or mostly by cash. So there's one of the there one of really important is cash cash register. This purpose of cash register is every cash sales will be exactly put in the same time to the cash register so that the company cash will be always maintained and secured by the cash register. Control of cash payment. The control of cash payment should provide reasonable assurance that payments are made only for authorized transactions. Cash is used effectively and efficiently. For example, control should ensure that all available purchase discounts are taken. In a small business, an owner or manager may authorize payment based on personal knowledge. In a large business, however, purchasing goods, inspecting the goods received, and verifying the invoice are usually performed by different employees. These duties must be coordinated to ensure that proper payments are made to creditors. One system used for this purpose is the voucher system, for the example. So, control of cash payment, it's already shown that payments are only made for authorized transactions and have to make efficiently or effective things for the company and only authorized by the person who is in the job or in the point to do that authorization. So that's why this is very important for company because this method could help the company avoid unnecessary transaction or ineffective transaction that could cause the company to understate their profit. Because sometimes a few employee, if there's no a good system, the employee could do fraud. Maybe they can work together with the seller of some things that they want to buy, and they have to cut or understate the amount of discount, so the company should pay more, and the more of the payment in the bill are taken to the hand of the seller and the employee of the company. So this is a system that available to make sure the company avoid any loss from these things. Voucher system. Voucher system is a set of procedures for authorizing recording liabilities. A voucher system is a document that serves proof of authority to pay cash or issue an electronic fund software. So the voucher system is when there's a transaction, this is really strict or really good method there to secure company transactions because an invoice should be approved first and then it's the details and the other about important thing about transaction should be received first and then it will be submitted it's or if it's only already approved. Once approved, the voucher is recorded in the account and filed by due date using the computerized system. So when the transaction is already in the due date, the check automatically generate and mailed to creditors, and at that time the voucher is electronically transfer to paid a voucher file. So this step or this method is really effective for a company because everything is under maintained the computerized system and already and all of the data is checked first. So there will be a small chance to a fraud or to a miscalculation or something is really small chance. That's why this is one of best system to maintain a transaction or the cash in the company. So this is case paid by EFT or electronic funds transfer. So this method is really uh, useful, or I think it's common for every company because mostly in this era every company paid everything using EFT because it faster, it's safe, and it has historical data about every transaction that might use EFT. That's why so many company use EFT to efficiency, safety, and also has historical data. That's why cash paid using EFT is often used in the company. So for me, the conclusion is every system and method that use has a purpose to keep the company cash under control and try to avoid any kind of miss or maybe fraud to maintain company profitability. Thank you.